Okay, now we spoke several sectors with Prakash, metals, autos and energy. But really the sector that has been the cynosure of the markets all through 2022 was the banking sector, banking and finance. So let's invite the lead banking sector expert, ASV Krishnan. He's the lead BFSI analyst for HDFC Securities. Thank you very much, Krishnan. First of all, wish you a very happy 2023. You know, when everyone says financials is a buy, the contrary can happen. But do you think this time consensus is going to be right yet again? 2023, year of BFSI?
Yeah, hi Lata, very good morning, and wish you and your audience a very, very happy new year. So, you know, when everything seems to be very rosy, obviously we tend to look for red flags. As of now, close of play December 2022, it seems we have navigated the period fairly well. From an asset quality perspective, I think it still remains a very benign cycle. Uh, uh, but I have a feeling that we might have exited the peak growth, peak margin quarter now. That's our sense. This was probably at about 18% loan growth, 9.5%, 10% deposit growth. Something has got to give. So I think growth, the base will begin catching up, and that's why we are probably exiting a peak growth, peak margin quarter in a sense.
Okay, all right. Hi, Krishnan. Morning. Then how do you approach stocks? Before I ask you what looks good to buy from here, which are those stocks that have run their course and you believe like taking some money off the table will be a prudent strategy?
So we've generally been heavily leaning on private sector banks. Structurally, obviously, they have certain advantages. The PSU banks had a handicap. Having said that, there's no disputing that there could be a temporary reversal in market share losses for PSU banks because they are well capitalized thanks to the cleanup that happened over the last 2-3 years. And they are deposit heavy at a time when there is a scramble for deposit for private sector banks. So I think PSU banks are the ones where we have seen significant amount of rally over the last 3 months now. We believe there could be some reversal there. We remain heavily leaning towards the private sector banks. Our top picks have generally centered around ICICI Bank, Axis, SBI, and Federal.
Okay, but just to scratch that point further, you know, it's not as if PSU banks didn't do well. The 1-year gain in Bank of Baroda is 127%, top performing stock actually. Union Bank is up 86% year on year. Bank of India up 73% year on year. And then Canada Bank up another 70% year on year. So you think there's still more juice?
So they've done well. You're right, Lata, which is exactly the point that we were trying to make, that we keep looking for evidence with that when that trade might peak out. We haven't seen any even early evidence of that yet, to be very honest. I think the PSU banks have been extremely aggressive in chasing growth thanks to the cleanup that they have had. And you can see that in terms of aggressive pricing across asset classes. I mean, you have smaller PSU banks which are now pricing their home loans lower than a State Bank of India, right? So that's not going to be sustainable throughout. We believe at some point of time that trade will come to an end. But from a very near-term perspective, we don't see any evidence of that reversing yet.
I request you to just hold on to that thought. We're coming back to you. For the time being, just request our viewers to look at the bottom of your screen. Bajaj Auto's numbers have come in and the exports continue to struggle. So on a year-on-year basis, it's down by close to around 40%. The domestic number on a year-on-year basis is up close to around 2%. But in comparison to Nomura's estimates, well, it's missed those estimates by roughly around 5 to around 6% or thereabouts. For the time being, the stock is likely to open up more or less flattish, but a bit of a miss out there. Nomura was factoring in a number closer to around 300,000 odd. It's coming at around 281,000 odd, so keep an eye out on that one. But before we go back to Krishnan, Sudarshan joins us to give us his 9-10 call. Sudarshan, go ahead.
Well, the Nifty is choppy. Take intraday trades in the direction in which intraday momentum flows. CanBank is a buy with a stop under 321.
Okay, all right. And Mitesh, what about you?
I will choose a sell on Britannia with a stop at 43.35 and targets of 42.30.
A standout brokerage report coming in from Jefferies, so watch out for the metal stocks. Krishnan, ASV Krishnan of HDFC Securities is still with us. Krishnan, would you spare a thought for the NBFC guys now, or has life just gotten a little tougher for them?
So cost of funds wise, I think it's a little tougher. It's been a little tougher. Obviously, the marquee names in NBFCs are the ones where you want to probably park yourself and find places to hide when that environment comes in. But today, asset quality does not seem to be an issue. Pricing is an issue. Yeah.
Okay, so if you, if you can discuss stocks, then what would be your hierarchy?
Our pecking order in NBFC
Yes.
is SBI Card, Chola, and Credit Access Grameen.
No, I meant. Okay, anyway, thanks for that. I meant in the overall BFSI, what's the pecking order?
ICICI Bank, followed by Axis, State Bank of India, and Federal Bank. Those would be among the banks, and among NBFCs, it would be SBI Card, Chola, and Credit Access Grameen.
Okay. Well, thank you very much, Krishnan, for joining in and speaking about the banking sector. So good going, but the pace of growth that we saw in 2022 perhaps cannot be maintained